Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and TradingView with over 190k reputation points. In this video, I will be speaking about EURUSD. Now, it's usual to keep the video as educational as possible. First, I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds and the big players, so institutions in the market, are doing and how they're moving and shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong historical monthly support and demand area. From here, in fact, multiple rejections to the upside have been created. Starting from here, we can see that every time that the market tested its zone, it got rejected to the upside quite aggressively. And what we can notice as we are speaking is that the market is testing once again this exact same zone here. So there is a good probability to see a potential rejection to the upside away from this historical monthly support and demand area, as already happened in the past, every time that the market was testing this exact same zone. So here on the monthly time frame, everything seems quite bullish. Now, let's drop down on the weekly time frame and see what we have. Now, from a weekly perspective, we can notice a very strong impulse to the downside, and then the market started this horizontal essentially movement, and there is the possibility of seeing a horizontal accumulation starting to build up in between these two levels. Now, obviously, not enough time has passed yet to see if the market will actually get stuck in a range, but there is the possibility, now that we have a high and a low, that the market might actually build a range inside of these two levels, which at that point would simply be a horizontal accumulation inside of a historical monthly support and demand area, which basically increases the probabilities of a potential rejection to the upside away from the level. Now, dropping down on the daily time frame, what do we see? Now, from a daily perspective, what we can notice is that the market seems to be inverting the trend. In fact, we can notice how we had clearly the creation of daily lower lows and lower highs. Now, there is the possibility for a shift from the creation of lower lows and lower highs to now higher highs and higher lows, since we have a previous low here, a lower low here, and now the possibility of creating a higher low at this level, essentially printing this inverted head and shoulders. We can also notice that as we have an impulse and a correction, if we want to measure the correction after the impulse, we have to take our Fibonacci from the low to the high of the impulse leg, and this shows us how the market has been testing the Fibonacci levels one by one, first at 0.618, then the 50%. Now we are at 0.32, from which bullish price action could definitely be created. We can also notice that if we look here on the left, this area is already support and demand from the past, from which this previous push to the upside started. And since here we have both the Fibonacci levels and this horizontal support and demand, we actually have confluence of support and demand at this area. And inside of a confluence of support area, there is an increased probability of seeing more institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. Now, speaking about institutional longing, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data precisely for the euro, the first thing that we have to keep in mind is that if we're looking at the data for the euro, we're actually already looking at EURUSD, because all currencies on the spot are traded against the USD. And what we can see here is that with the last reports, net positions have only been decreased. We went from minus 7K to minus 56K net positions, showing how institutions are still not moving aggressively to the bullish side for EURUSD. And that seems perfectly reflected also in the price action, with the market clearly pushing lower as institutions are shorting EURUSD. However, we can start to notice a shift just with the last report. We can see that even though net positions are decreased, with the last report, longs are starting to get added. And since there was the holiday, we don't have the new data yet, but if the new data will show even more longs added and shorts getting closed, that could definitely mean that institutions are starting to build up their longs around this area. And at that point, the inversion of the trend would become even more probable. Now, in a situation like this, where we have confluence of support, we don't yet have the new report, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside, completing this inverted head and shoulders, and for the market to complete this daily impulse correction impulse pattern to the upside. That definitely wouldn't surprise me. Now, all this general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg. In fact, if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website. Here, you can gain access to all my courses, so 26 plus sessions of courses that go from the very basics of becoming confident with charts to all the way to building automated trading algorithms using the MQL4 language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer to build and optimize those portfolios of strategies. So a lot of very interesting stuff that you really cannot afford to miss. You also have the possibility to gain access to the Trading Station software with Telegram notification integrations to really accelerate your learning and you're becoming confident with charts. You have the possibility to gain access to one-on-one private mentoring directly with me from your student dashboard, as well as the COT data software. And you also have the possibility as a student, this is only for already members, to gain access completely for free to my MT4 EA's algorithms for free again. And here, in fact, you can see that there is all the presentations of my algorithms. And if you continue to scroll down on the website, you will see that you have the possibility to gain automatically access with the email and password that you will create during the sign-up process. So definitely looking forward to see you on board and see you on your student dashboard. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I'll see you in my next breakdown.